welcome to another Major Market Movements video blog update for January 9th, 2015. I'm Quad G, and in this video we're covering the candlestick pattern called a doji. And here's a fine example of one here in the US dollar index on a weekly basis. We see that this particular week, we'll zoom in here, and it looks like that's as close as we're going to get. For this week, the opening price came in at about 88.50 or so, and intra-week we saw a high up here. The high was 89.62 and then came down to hit a low at 87.88, but then closed the week right back where it started, right back there at about 88.50ish. So that whole pattern, it's a lot of running around for 1 week to have it open and close at the same spot, creating a doji. Now, a doji by itself isn't something to make a move on until it's confirmed, at least in my opinion. Once a doji is confirmed either to the upside or the downside, with the next candle closing above or below the key resistance levels, which are formed by the intra-period highs and lows, it's going to help determine which way the market is wanting to head off to with some momentum. So in this particular case, we can see that the following week we got some more running around, and then the market comes down and closes below the bottom of the doji there at 87.88. So with the close below that, that confirms the high of the doji there at 89.62 as a key resistance and tradable top. And of course, with that finalized, we do see some follow through, and over the course of, let's go to the next slide. Over the course of the next several weeks, we can see how this played a key role in a major top in the US dollar index, and that was a major top that wasn't to be exceeded for a few years to come, with several months of downside momentum from that point. And there was also, right here, we see an outside key reversal on a weekly basis that also came in to assist with the move to the downside. All right, so that's an example of a topping action. Here's another one for showing a good sign of some bottoming action here. Is on this is silver on a daily basis. We get a doji here, and you can see here previously we got another doji, but we didn't confirm it going up or down. The next candle didn't close above or below the extremes of that candle, that doji, so there was no signal to do anything with it. But this particular doji did see a confirmation candle to the upside, closing above the highest point of that doji. The intraday high was at 34.63. So with the close above that, we started to see some momentum start to erupt to the upside, setting a key support tradable bottom here at 33.63. So if we zoom out in the next slide, you can see that that bottom here was set by that doji, and we got some significant fall through to the upside from that point. And dojis can also can be continuation patterns. They can form in the middle of a trend. This one's a prime example right here, where we have the trend obviously moving up, forms a doji. Now, we don't know whether or not the next candlestick would have confirmed it and go to the upside. That would have confirmed a continuation of the trend to the upside. If this particular candle, this daily candle, had come down and closed below the end of that doji, then that would have confirmed a top, and it would have been a signal that we could have had some follow through to the downside. But since you can see that we've had a few of them here, doji, 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 and every time the price comes up and closes above the highs there, you start to see some follow through. Get that out of there. So that's a prime example of dojis being used as a continuation pattern. And that's basically it for dojis. The one factor that does play into it is if a doji is at the top or the bottom of a trend, and you do see a confirming move, a counter trend move, it has an increased probability of forming a top or a bottom, based upon how the doji is confirmed, either high or low. All right, so that's our basic coverage of the doji for this week. Y'all have a good one, and we'll talk to you later. Adios.